Hi, and welcome to the Market Alert for Monday, the 25th of April 2022. So Friday, the main news, Tech Rex as bond and bid sparks major curve flattening. The FANG complex has basically erased all of the late March melt up. Yeah, the Dow was down 981 points on Friday. This is not so good. The bad and the ugly. And the ugly may have only just begun. I think it's starting to look like that, isn't it? Global shipping update. China is about to wreck your summer. The coming volume drop in ocean container volumes leaving China for US ports is staggering. A really good article, that. I'm not going to go into detail. And as I've spoken of before about food shortages, etc., UK largest supermarket begins rationing cooking oil amid supply disruption. You're going to see a lot more of this as we head into the autumn. With fertiliser going from £200 a tonne to £800 a tonne. I have a farming background and connections in the farming industry, and they said it's too expensive, it's not worth actually buying. So the yields on the returns on crops is going to be devastating as well. Could this be another sign of a global food crisis ahead? Absolutely it is. And over to Europe, Lagarde, the criminal, demands ECB dissenters keep quiet as central banks prepare for liftoff. What an absolute criminal this woman is. And the ECB and the International Mafia Fund. They're talking about not raising rates in Europe until the end of the year. Well, good luck with that one, that's all I can say. Because the chances of being able to do that with the way inflation is at the moment and it continues to rise, then it just goes to show, doesn't it, how fragile the whole of the EU is. If they can't even raise rates by 1/4%. So watch out for Europe. It could be a big sinking ship. News this week as well. It's Italian bank holiday today. What else have we got? German info, climate. This is being downgraded. There's some very interesting downgrades this week. Core durable goods orders up slightly. Durable goods for the US up slightly because it was down last month, and then the confidence also up. That'll be interesting as well. Nothing on Wednesday, but Thursday, what was really interesting is this one. The advanced GDP, previous 6.9 down to 1%. That's going to be a very interesting day if it comes out of that. We've got some PCE price index as well, which is more or less the same as predicted before, and consumer sentiment there. But we're going into another holiday weekend for the UK as well. Maybank holiday a week today. No Fed central bankers speaking this week, so the market's going to make up its own mind. Gold silver ratio while we're here. Silver absolutely crushed as per the headline. We'll look at that in more details in a moment. Heading back to where I said we would. And I've got some interesting theories on what's going on here as well. Apart from the manipulation, of course, or why they're manipulating it. And again on Friday, massive volume. Another 500 million ounces of silver paper traded to crush the price of silver. It's options expiration for the silver market tomorrow. The tech traders want this market as low as possible to collect the premiums on the options that they've sold, and that's why one of the reasons you're seeing this happen in the silver market at the moment, but it's not over by a long shot to the downside. Okay, let's kick off with the Dow. This down 981 on the cash market on Friday. It was holding overnight, but not at the moment, starting to move lower. Drawn in the latest fibs, and you can see that we're heading down now to these sorts of levels and to this support to the left. The market has given up on the upside after Powell came out last week and said he was going to raise rates some 6 or 7 times, and the downside target really is going to be in this sort of region of 32,679 if the market doesn't hold. What with the carnage and also the lockdowns in China and everything else coming, it's just incredible to think that this market can actually hold as well. I mean, it's ignored the war, it's ignored inflation up until this point. In the 30 minutes Dow, you can see it was all the way down, never came anywhere near to the 20 bar moving average on Friday. We did have the prospect of the market closing above the S2, but then it went south, and then it just got worse as the evening went on. Like I say, the cash down, the official, was down 981 points, one of the biggest down moves we've seen for some time. At the moment, the market is sideways, trying to get back above Friday's low. It will need to do this, and the 20 bar moving average, if it has any chance of moving to the upside. We know on big down days that we've seen before, the market does its best to try and move back to the upside. This is all going to be dependent upon whether it has the desire, the strength, the manipulation to do so. But like I say, keep an eye on the downside targets in the daily chart as well at this point, because there is a concerted effort to actually crush the gold and silver market prices at this time to create a lot of people to get out of those long positions and sell to the banks. But I'll talk about that more in just a moment. So let's have a look at the DAX. This too also moving lower. If I can find it, here we go. So this is already down at the low here of 13,879. It's got to hold at this level. If not, then we're going lower. So I'm just going to draw in some fibs on this one to the downside. We've already taken out 38.50. Very important area here, as you can see, because we've also got this 62% retracement there, golden ratio at 13,900. So watch that when the futures market kicks off, well, certainly at 8 o'clock for the cash. Then we've got these other two targets to the downside, along with this price here of 13,272. Now the DAX, you can see, is nothing like Friday's sell-off, where we had nearly 1,000 points in the Dow, and it held quite well. So that may be a bit of a positive at this area if the market can hold. Let's just have a look at the 5-minute chart for last week and then just bring you up to speed on where the market's currently trading. So we kicked off in the futures market with the market being sort of choppy. 7 a.m. it dropped down to the previous day's low, Thursday's low, traded sideways, came back up. They had a retest initially on the first bar, and then they moved the market to the upside. There it found resistance. They brought the market back for a double bottom and then sent it back. You can see all of the overbought and oversold, and it's interesting because obviously we were overbought at this point. The market came back to the low once more, and then we moved to the upside, taking out the high to the left, and the momentum dropping off there. And then we've got the BRN, everything turning back to red, and the market then moved lower. The market held at the low. It was very boring, as you can see there, and then eventually it gave way and moved down. It did rally back during the mid-morning. You can see the market coming back 100 points there, and then eventually the Friday afternoon with the Dow, we saw the DAX succumb also to the selling that was there. But it did do its best to try and hold at one point. They brought the market back. This at 3 o'clock, there was a move to the upside of 40 points. But then when it got to the averages, in particular the 50 EMA, the market then moved lower. And then the 20 bar moving average dominating as the move continued to the downside throughout Friday evening. The market is currently way below the low, and already sitting below the S1 as well. Let's just squeeze this chart up. We've got the S2 here at 13,226. I think that's what it says. Sorry, 13,826. Yeah, and these lows here, this is going to be very important. If the market takes out these lows, then we are going to see prices continue to the downside. Let's just bring in the 30-minute chart there. So you've got the S2 there, and the S3 would be the down target, and that's 612. How does that tie in with the daily chart? Well, let's have a look. 612 is in between 78 and 89 if prices are moved to the downside there. Right, let's have a quick look at the currencies. Starting off with GBP, JPY. This is struggling a bit. There's all sorts going on in this market arena as well, which I'm not going to go into, but there's a really good article about this on Zero Hedge as well. Prices heading towards the 20 bar moving average there. Let's draw some fibs just to get an idea of where we are. We're at 62% at the moment. This will need to hold. The dollar's moving very strongly to the upside at the moment, which is putting downside pressure on the pound as well. This is a 30-minute GBP yen. You can see this moving lower on Friday, then trading sideways after being oversold, and then also moving back and retesting, and then it just became really quiet overnight. So we've seen the GBP JPY move lower down to the S1. It's oversold and is attempting to come back to the low. In the pound, this was crushed on Friday. As you can see, they're down to 128, so we can't look on the daily chart. So I'm going to move to the monthly chart just so you can see where we're at. We're not anywhere near the lows that we've had before in this market. We're just heading down to 89 in the daily. If I can just draw that in the right place, it would help. Try this one up to this one. There you go. We're just through 89. So let's draw in from this major low. Again, we've got an interesting confluence here of fib retracements. Let me just get rid of that, and you'll see there we've got a 50% retracement of this move back to here, but it's also 89 as well from that move back as well. If that's taken out, which it is at the moment, then 62, and then down to the 117 area as well. The dollar really strong, as I say. There's the pound moving sharply lower on Friday, getting absolutely crushed. I don't know what Bailey said on Friday, but obviously something. You think he'd be increasing interest rates when he was speaking at the moment to combat inflation, but he's not, and that's because they can't. Makes you wonder, doesn't it? It's like they're just leaving it to the US to destroy the global financial economy at the moment. So in the metals, we see silver getting crushed. It's gone through the 200 moving average. This is a very important area. If this is broken, then we're certainly heading for 89, if not all the way down to $21 there. May seem impossible to do this given the backdrop of inflation and everything else, the war. It's got nothing to do with that. It's to do with manipulation of the silver price. Get it down as low as possible. And the reason for this is quite simple, because if we look at the US dollar, we see it continuing to move higher. We look at the monthly chart, we have the exact reason why they want to get the dollar up to 103. They can do this with rate increases quite easily, and that's where we're heading to. There will then be a triple top. Once we get to that triple top, the silver price will have been crushed. Let me show you what it looked like in March of 2020, and this is what you can expect to see in the metals market, particularly in silver. It's more important than gold as far as underpinning the constitution, and you can see exactly there. This was a $10 drop, exacerbated here when the market was trading at $17 there, and they ran it all the way down to 12 over a few days, absolutely crushing the price and sending the gold silver ratio up to you'll see that all-time high of 125 as there we go. You can see it there where the market 126 ounces of gold and silver. I know we've got quite a way to go with that in the daily chart at the moment, but look at the acceleration to the upside at the moment of this gold silver ratio. You can see, look at it overnight, it's just absolutely moving. The volatility in there is quite something. So if we go back to the chart and we come back up to date, for me this market is heading down to that $21 level. This will allow the banks to get out of their shorts. Now you would think that by doing that it would actually turn the price back and move to the upside and be near on impossible, but it's not. In the early 90s, I studied the commodities trading advisor qualifications to become a broker. Not that I wanted to be a broker, but I was always interested in what went on behind the scenes. And it's very easy, because if everybody's long the market, or the majority are long the market, and they've got stop losses like I have, I've got a stop on my last position, which is going to be getting close to it now. As these positions are taken out by the manipulation of the banks, those stops because those traders were long will have to sell, and that means that the banks will be able to buy. So for me, this is a no-brainer that we're going to be heading down to these sorts of levels. Now, we're already down on the overnight, and if you're down on the overnight, as you've seen during the last week, again, I've commented about this, if you're down on the overnight, then we continue down when the LBMA sets the price during the day. Down on the overnight, down, and apart from the odd day, but as a rule, what we've seen over the last few days is we're starting to move this market to the downside sharply, is this sort of action where if it's down on the overnight, it remains down. Friday, we hit the $24 level. That was no problem. That was there, and the market held. They managed to bounce it back 26 cents, and then the market started to sell again, and now we've gone through that. We're going to go straight through these levels down to what would be the 23 level is on the cards because it's not that far away at the S3 for today. A lot of support down here though, and you will get bounces, but until the dollar gets to that 103 area, I can't see how the metals markets can go up. It's just being crushed. I mean, even as I look across at the other screen now, it's just being hammered to the downside. Gold also, but nothing of any of the same magnitude. There you can see that if I draw this in, we're at 78% on this, nowhere near the hammering that silver is taking at the moment. And crude oil also being moved down as well, which you can see there, coming back towards the 78%, unless the 50 bar moving average holds the price there. So yeah, it's going to be an interesting day and an interesting week in the silver market. And like I say, for me, it's got a long way to go on the downside. It is absolutely criminal. It's unthinkable, but we've got no choice because Bank of America has leased 1.2 billion ounces of silver off JP Morgan. It's got no way of paying it back. And the only thing they can do to get out of the position is to crush the price. You wouldn't think there was a war on, the global economy falling apart, food shortages, and hyperinflation in the background. These markets are completely disconnected with manipulation to suit the bankers and to save their own bacon, and that's exactly what we're seeing here. Okay, so we'll wait and see what happens, but one side of me is eternally grateful because I shall be buying more. I mean, how can we have hyperinflation of prices, and we know that the real inflation is around 20% on everything? How can we have this? And silver is now actually 60% cheaper than it was in 1980 and 2011. It's a no-brainer, isn't it? It's just a matter of being patient and waiting, because once the US dollar starts to collapse, and it will, then we'll see the metals markets have their day. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.